Hello friends, welcome to my channel Trade Fanatics. In this channel I'm going to explain to you how to trade the trends profitably using the three-step approach that I'm going to explain now. The three-step involves, in the step one we have to identify what the trend is, whether it is in an uptrend or it is in a downtrend. In an uptrend we only look for buying opportunities, in a downtrend we only look for selling opportunities. That is, essentially we are trading with the trend. Step 2 involves identifying the zones where a good trading opportunity arises and where we would be interested in entering the trade. Step 3 involves assessing the quality of the trading opportunity that has emerged. That means we have to identify the risk to reward ratio, and any trading opportunity that doesn't give us 2x reward, then we are going to ignore them. What I mean is, we are only looking for 1:2 or more than 1:2 risk to reward ratio. Anything less than 1:2 risk to reward ratio, we are going to ignore those trades. Okay, so that's what we are going to do. Let me explain you the concept in more detail here. So as many of you might have already known, in an uptrend the market prints a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This is what an uptrend looks like. Okay, in a downtrend the price prints lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, I mean, many of you might ask, well, it's not going to be like this exactly in real-time charts. I also agree with that. For this purpose I'm going to explain the concept with a very simple terms, and then on my weekly assessments I'm going to explain more detail how to deal with real-time charts, where sometimes you will have to encounter some complex pullbacks and complex trends. To keep it simple so that you understand the concept well, I'm just going to keep the charts as well simple for this particular video. Okay, in a simple uptrend it's going to print higher high, higher lows, higher high, higher lows. In a simple downtrend it's going to print lower high, lower lows, lower high, lower low, lower highs and lower lows. Okay, so for instance, if you identify in step 1 that it is in an uptrend, the price is in an uptrend, which is like this: high, higher low, higher high, higher low, and then now we are going to look for a trading opportunity zone when the price makes a higher high. So we expect when the price is higher high, we don't simply go and buy at this point. The ideal entry zone would be here, where it broke the previous higher high, and the second entry zone would be the previous higher low, which is this zone. So we are interested in only these two zones. If the price comes to these levels, only then we would be interested in taking the trades, either in this zone or in this zone. Okay, so if the price comes to this zone here and provides us a trading opportunity, then we would be interested in assessing that particular trading opportunity. Else, if the price comes below that one and then comes to this area, then we would be interested in again looking for a trading opportunity and assessing the opportunity, basically whether we have a good risk to reward ratio and all those things. Okay, so that's all we're going to do. It's very simple, very neat. Basically, if it's an uptrend, we are going to look for a zone which is the first level of support here, which is a previous higher high, and the second one is previous higher low. Okay, if the price comes back to this level, we'll be interested in looking for a trading opportunity, and if price comes back to this level here, we'll be again looking for a trading opportunity. And it's just the opposite for the downtrend. In a downtrend, if it comes like this, then we would be looking for a selling opportunity here, which is the previous lower low and previous lower high. These are the two levels that we are actually interested in, and nothing else. We are not interested in here, 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 anywhere. No, we're only interested in this zone and this zone here. Okay, so if price comes to this level, then we'll be interested in taking a trade if an opportunity arises, and we are going to assess the quality of that opportunity to see whether we have got a good risk to reward ratio. That's all we're going to do. This is a simple concept, and that's all we're going to follow. And you might be wondering, you might not get much trades using this strategy, which is absolutely wrong. You are going to get very good trades It's going to be a high quality, high probability trade, so that I mean, you may not get like tons of trades and all those things, but you are going to get some really good trades that can make you more profitable and sustainable. And as a trader, it's very important to be sustainable in the market. Okay, so that's what we're going to do. I'm going to show you a very quick example of the chart, and then in further videos I'm going to show you how we are going to assess in real time, and then I'm going to provide you the weekly assessments as well that can help you understand the concept better, and also be ready for future trades as well. In this particular stock, you don't have to worry about which chart it is, whether it's a forex, whether it's a stock, or which market is it, a European stock or an Indian stock or a US market stock. You don't have to worry about all those things. All you have to focus on is the chart. You don't even have to worry about the time frames. In this particular thing, we can see that the price is making higher highs and higher lows. Okay, it was like this, and then higher high, higher low, higher high, and this is what it is doing at the moment. So we would be interested in this zone here. If the price drops to this level, we'll be looking for a trading opportunity, and the second level is this one, which is the previous higher low. So these are the only two zones that we are interested in. Okay, if the price comes to either this level here or this level here, these are the only two zones that we are interested in, and we are interested in only buying opportunity, not selling opportunity. Remember, we are going to trade with the trend. Okay, so it is in an uptrend. We are looking for buying opportunities. We have marked the levels, and this is how we have marked, and the price comes there, we are looking for a buying opportunity. That's all. So far so good. Very simple, nothing to be nothing complex in this. Basically, it's very simple, no complications at all. So if you see one previous one here, we can see here that it has made high, higher low, and probably here you can say it made a higher high. So in this situation, as the price comes to this level, we are already set. It is in an uptrend now, and we are going to mark the levels, that zones of interest. Basically, this would be our first level of support that we are interested in taking the trade. As I said, it's a zone. Basically, it's not a line, so it's a zone that we'll be looking at. And the second one would be here. Okay, these are the two zones that we are interested in. If the price comes to any of these zones, we'll be interested in taking the trade. Okay, it's in an uptrend, and this is our zone. So when the price came here, we are going to look for a trade. So how are we going to take the trade? I mean, you might be having your own strategies of entering a trade, or whatever this strategy you have, you can go ahead with that. One simple strategy that I'm going to tell you is, you have to decide whether you have to take the first trading opportunity that arises, or you have to wait for the second one. How do you identify? We are going to do this very objectively, so that we are consistent in our assessment in future as well. Okay, so for example, let me go back to the whiteboard again and explain what kind of trades we should be look for. Should we be taking the first entry, first trading opportunity itself, or should we wait for the second one? See, if in an uptrend, if it is going like this, and this is our first zone of interest, this is our second zone of interest. So what I recommend, and I personally use, is if the price falls to this level very quickly, printing some really good trending bear bars, then obviously I don't want to take the first entry here, right? Because it's very strong. The bears are very strong here when they are printing good trending bars, and it comes crashing down to this level. Then we have to wait. We have to look for a second entry. You might see some reaction like this, and then come back again, and then it can give you another opportunity. This is where I would be interested in taking the trade, the second entry, and not the first entry. Okay, to me this is the first entry, and this I gave you the very simple objective reason why I wouldn't be taking the trade here. For instance, if it is still in an uptrend, it goes up, and then it comes slowly to this point here. This is our first level of support. If it comes slowly and then it struggles to come to this level. What I mean is bears are really struggling to bring the prices down. That means they are weak. In this instance, you can obviously take the first level of entry. This is a very simple concept. This is what I do all the time. If it comes crashing down to the level of support, then I'm not interested in the first entry. I'll look for the second entry, wait for the market, do something and give me a second entry. If it's a weaker pullback, then I'll be very aggressive. I'll be looking for first entry itself. So I guess that concept is very clear here. So using the same concept, we can say we wouldn't have taken here, we wouldn't have taken the entry here, right? As you can see, this came crashing down, printing all the strong bear bars, right? These are all pretty strong bear bars here, right? This one here, with trending bear bars. So, and it came to this level very quickly, very strongly, and bears are showing they have got very good strength. Okay, so we waited for the second entry. When it went up, the bears couldn't, so obviously bears should have taken these prices lower, which obviously they have failed. So now this becomes a very good entry for me. So I buy this, and this is my entry above the high of that bull bar, and below the low of that bull bar will be my stop loss, and I will be looking for 1:2 risk to reward ratio trades. So let's see whether we have got a good trade here. We'll be buying about this high, okay, and below this will be our stop loss, right, above the high of that bull bar, and then below the low of that bull bar will be, that is a recent swing low. Okay, it's a recent swing low, that's why I put it there. And we can assume this could be our first level of resistance. Obviously that should be broken because it is in an uptrend, remember. So in an uptrend it keeps putting higher highs and higher lows like this. So obviously we expect this level to be broken, but at least this will be our first level of resistance, right? So we are going to see what risk to reward ratio we are going to get for that particular level. Oh, I'm sorry, I picked the wrong tool there. Right, so this is our stop loss, and this is our entry price, and this is our first level of resistance somewhere here, so which is close to 1:2, and that makes it a very good trade, and we would have taken the trade there. And the price actually came down here, but it didn't hit our stop loss. So you guys all know that you should have patience and stick to your strategies and have trust in the strategy that you are going to use for your trading purposes. So this is a very good trade, and it turned out to be good. So this is a very simple concept. As I said, I will just summarize this very quickly. We are going to go through 3 simple steps. Identify the trend, whether it is in an uptrend or a downtrend. If it is in an uptrend, we are going to look for only buying opportunities. If it's in downtrend, we are going to look for only selling opportunities. And second step is identifying the areas, the nice high probability zones where the prices can actually reverse from that zone. That's the area we are going to focus on while taking the trade. And the third one, which is also very crucial, I cannot stress any more on this part, you have to assess the quality of the trading opportunity, and anything that where the risk to reward ratio is less than 1:2, you shouldn't be taking those trades. That's my recommendation for this particular strategy. And if you're a seasoned trader, then you might even look for 1:1.5 or even 1:1. So that we are going to cover in the later videos, but for this particular video I would suggest you to stick to 1:2, and you are going to get plenty of trades. You don't have to worry about that. Okay, so I hope you like this video, and please subscribe to my channel, and also like this video and share with your friends. So that will be a big motivation for me to come up with more videos, and that can help you make a better trader. Thank you very much, guys.